Tyler, Advanced Auto Parts stock jumped here recently on some pretty big news of an asset sale that looks like it's part of the newish CEO's plan to try to transform this business. It's been a long time loser and maybe turn it into the winner that some of its biggest competitors have been.
Yeah, Advanced Auto Parts has kind of always been the black sheep of the auto retailing industry for a long time, mostly because it has a hard time with a lot of things. And this could actually maybe finally be the catalyst we're looking for.
Let's get into it and take a look and see where you come down on if this is the thing. Maybe an idea for where investors might want to look, if not. And I'm pretty sure I know which way you're going to go. We'll get to that in a minute. But first, I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go check out our special link. It's fool.com/unscripted. Go to that link and you can get access to the top 10 stocks to buy right now. Tyler, this is the announce. Advanced Auto Parts selling off Worldpac, which is its distribution business, I believe.
Wholesale distribution business, so like the behind the scenes stuff that doesn't necessarily involve the actual retail businesses themselves. There's two components of this that really stand out to me. Because one, as I kind of hinted at the beginning, Advanced Auto Parts is for like a business that seems to be one of the more idiot proof kind of industries to be in. Auto parts retailing, for somehow Advanced Auto Parts has been like the one that just can't quite figure it out. This is for like the past 15 years, I believe. There's been activist investors trying to fix it either through like strategic reviews or taking activist positions. I think Elliott Management, who's famous for these sort of things, had
Mhm.
tried for a long, long time. And it's never quite worked. It's always been troubles with inventory management and converting these giant stockpiles of inventory into actual cash relative to its peers, which have basically been the model of exactly how to do it, which is, I think, kind of bizarre because basically AutoZone and O'Reilly Automotive have shown precisely this is how you do it and this is how it works.
Yeah.
And Advanced Auto Parts has never quite been able to figure it out.
It has not been a great investment over the long term, just money sucking, value destroying business that's been Advanced Auto Parts. Like I said, I think you're exactly right. This has been a frustratingly tantalizing opportunity for investors because the idea of just do what these other guys are doing and you could be this great business, it just hasn't planned out. So let's talk about they've raised this money from this asset sale, the CEO that's in place now. What is the plan, do you think?
The two things about the plan. Number one, this is after taxes. This is a $1.2 billion cash infusion for a $2.25 billion market cap company. So we're talking about a almost more than 60% of its entire market cap in cash, just basically flowing straight to the balance sheet. Now, it does have quite a bit of debt relative to its total cash position. So maybe this is a debt pay down way. Maybe this is another like way to reinvest in the business in terms of like maybe updating stores, trying to reconfigure its supply chains since it is getting rid of the wholesale parts distribution aspect of its business. How can we remake this supply chain to be a little bit more asset light than it has been in the past? There's a lot of ways that it could go, and what management hasn't exactly given a entirely clear plan on what that is, but I think on paper, this all makes sense, right? Take what has historically been probably one of the not as great components of the business, focus entirely on the retailing of auto parts, which, as proof by O'Reilly and AutoZone, is a great business to be in. If you can reinvigorate the brand around this and get that inventory cash conversion problem finally solved, this
But
looks like
that's the key, right? That's the key. Those two things, again, simple is rarely easy, but those are the two things that we've seen AutoZone and O'Reilly do really well. Is they manage their inventory, they turn their inventory incredibly well, and they turn that inventory into cash incredibly quickly. You do those two things at the scale that they have, and you create massive amounts of value. What do you think is going to happen?
like I said, on paper, this makes a lot of sense. And it certainly has the financial firepower now to do it. Post closing of the deal, I would like to see what their inventory looks like, what the balance sheet actually looks like after this. But it comes down to now it comes down to execution. And that's where this might fall apart because, as we've mentioned, Advanced Auto Parts has always been an execution problem. Now we have a new leader. Yeah, Shane O'Kelly came in as the new CEO. He came from Home Depot. He came in. He's had a lot of other parts distribution, retailing sort of experience in the past. I'll be willing to give him the benefit of the doubt to figure this out. And this seems to be like, compared to his predecessors, this is a big move that nobody else was willing to make. So there is a plan there, but I think it's going to come down to prove it. I want to see what the balance sheet looks like, and I want to see a couple quarters where we see significant improvements on inventory turnover and cash conversion, because those are, in my opinion, the two things that Advanced Auto Parts has never been able to solve. If they can finally solve those problems, then yes, this might actually finally be the turnaround story that everyone has hoped it would be.
But no, I think you're right. Is there's the potential is there, but I think the smart move for investors is to put it in wait and see mode. Or give them an opportunity to demonstrate that it's working. Show some metrics. Get this acquisition closed. Show us what you're going to do with the cash. Number one, show us you can do it well. Then show us that it's going to fix the operations.
Yep.
And realistically, we're talking multiple quarters before that shows up, right?
Yeah, we've all been burned before thinking that it was going to turn around. So it actually needs to prove that it can turn around this time before anyone wants to jump in.
We got a couple minutes here. Let's talk about a business that is still in the auto parts industry that has demonstrated over time its ability to make money really well. They've done lots of bolt-on acquisitions over time too to grow and to establish themselves. They're actually really important to these auto parts retailers. It's a company that you like a lot that you think right now might be a better buy.
Yeah, we could obviously just go with AutoZone and O'Reilly because they are the leaders in this business. But one that is actually the key supplier to all three of these companies is Dorman Products. They basically manufacture a lot of the aftermarket parts for just about any car that's on the market today. They have something like 135,000 shelf keeping units on their like list of things that they make, which gives you an idea of like the extent of what they do. They have their own branded stuff as well as kind of anything that is private label. So like anything that's an O'Reilly or AutoZone or advanced like branded product, there's a good chance it came from Dorman. The reason I like this is it's tied to the hip of auto parts retailing, but doesn't trade for the same kind of premiums that the AutoZone or O'Reilly have traded for over the long term, and doesn't seem to have the black sheep operational issues that Advanced Auto Parts has. Right now, as of this recording, it trades for about 22 times earnings relative to AutoZone and O'Reilly, which tend to trade much, much higher than that.
Yeah, just for context, at recent prices, Dorman trades for, call it 23 times earnings and about 24 times free cash flow. That's not cheap, but you pay up for performance, right? And this is a company that's shown its ability to convert free cash flow, grow that per share over the long term. You have a company with a proven track record of success. You have a turnaround that has a proven track record of not succeeding. So I think you're right. Wait and see on Advanced Auto Parts. Let them earn your money out there, investors. If you're looking to invest in auto parts space right now, Dorman is probably the better, safer, better performing way to go.